Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So I mentioned on a prior episode that a lot of times early on in our business, we would much rather spend time than spend money because typically we don't have much money. And that mentality can then spill over into things like taxes. So I actually want to share a story with you. So last night, a friend and fellow CPA texted me. He told me he received a message from a client saying she was disappointed with the outcome of the return. So she prepared it on her own in an off-the-shelf software, which shall remain nameless, and got a bigger refund. And she filed it. And then she asked him why she should pay him if he didn't get the same result. She said that she checked it with a professional or or an expert, a quote unquote expert reviewed it. And it got me thinking about how hard it is for tax professionals to argue their value when in theory, a piece of software or in the future, machine learning and artificial intelligence can then basically say, well, we got you a bigger refund, right? And it may or may not be right. Right. I'm assuming, right, based on the information I have and my respect for this professional, that whatever he did was probably right, and whatever she did in the tax return software was probably slightly off, or was manipulated in a way where information was left out, or whatever. Right. That's all I can infer. But my point being that the outcome is not the value. It's getting it done right. And it's really important to understand that the goal of your taxes is not the biggest refund. The goal of your taxes is the best outcome possible that leads you to paying the least you legally owe in total. And the big word in there is legally. And because the tax code is so complicated, most people would miss the details that lead to that optimal outcome. And tax professionals like enrolled agents and CPAs, they're trained on these details and they can help. But their value gets lost when the perception of the customer is that they're only worth the amount of the tax refund they can get for them. And I want to shift that conversation away from your tax preparer is only as good as the refund they get you, or that somehow a bigger refund is a measurement of their ability. It isn't necessarily. And typically, if you are filing and you have a huge refund, that can also be a potential red flag of like, whoa, wait a minute. Like, how did that happen? How did you overpay so much this year? Or how did you suddenly discover all these deductions, right? So I want to go through with you on this episode the hidden costs of either doing your own taxes or hiring a really, really low cost pro where you're just basically shopping for the price of the return, right? If you are a business owner, fundamentally, if you're a business owner, you should not be shopping for simply the cheapest tax preparer, period. You shouldn't be, because there will always be someone who will do it for borderline free. And I don't think you want that person doing your taxes. So let's go through the costs of actually having a cheap tax preparer or by doing it yourself, because it may seem like this is the cost-effective solution for you. It may seem like, well, I can't afford this other person. I can't afford a CPA, so I'm just going to take this approach. I'm going to tell you why it probably makes sense to prioritize this as an expense, because here's how much it's going to cost you. First, there's the obvious risk that if you'll end up paying more in taxes if you don't hire a pro who understands how to deduct certain expenses for your business. So even if you hire someone, if the preparer you hire, or if you're doing it yourself, and the preparer you hire isn't putting due care into your return, not asking questions, not showcasing an understanding of the tax code and how you can leverage it, then you're probably missing out on deductions and they're just taking everything at face value. Not only that, but if you make mistakes on your return, and they're discovered by the IRS, you can then get stuck with penalties and interest if you got an inflated refund, let's say, or if you didn't pay enough in taxes that you should have. And it really can be costly. So you filing your return and getting a bigger refund, I would also say, well, hang on to that refund because you might have to pay some of it back depending on, if they catch it. And yes, the IRS, by the way, can catch discrepancies even if they don't fully audit you. So this is a really important thing. The IRS will get certain documentation, like let's just say you didn't report a 1099 that you got. Well, they're going to see the 1099 came through. They're going to see your return and be like, she claimed less money on her return than the 1099 says. And that's going to send off an alarm bell. And they're going to send you a letter saying, hey, we noticed that maybe you didn't claim this income. So we're assessing taxes, penalties, and interest on that amount. And that can get you because you're going to end up with penalties and interest on anything you owe. So to minimize the likelihood of penalties and interest or any potential future tax liability, I always recommend you have a professional look at it. And even if it is just, I'm not a big fan of just reviewing tax returns. I think most professionals would feel comfortable. Like if I'm going to sign it, I got to prepare the whole thing. But you've got to find someone who will work with you in your budget or, that you can be flexible with because it is worth 100%. It is worth having a professional do it. And the second thing is a professional can help uncover your blind spots when it comes to your bookkeeping. So this happens all the time where business owners will come to me or another tax pro, right? And they'll say, I need you to do my taxes. But then they hand you these books that are basically a glorified spreadsheet of a list of transactions, or, it's a QuickBooks file, but it's not up to date, or it's completely mismatched and not categorized, not reconciled. And there's so much stuff missing. Maybe they use their personal account for certain business expenses and there's no visibility into that, right? Maybe they missed something when they were going through their bank statements. So if we're not asking these questions as professionals, like I'll go in and say, hey, what's this about? What's this about? Hey, I noticed that you deducted utilities, but not rent. So can we go back and try to find the rent payments? There are certain things that a professional will ask you to provoke you bringing more deductions to the table, ideally. And if you don't know what to look for, then you don't know if you're going to be missing out on these things. And a lot of low cost preparers, and I'm just generalizing here, but a lot of low cost preparers, like your typical storefronts, will just take what you give them, take it as truth, not ask any questions, and hand back a tax return. And I'm going to tell you right now, if your tax preparer, if you are a business owner and your tax preparer takes all your documents, doesn't ask a single damn question, and just hands you back a tax return that's done, run, because they have taken no time to inquire, to understand your business, to actually, ask questions that could provoke potential deductions. They're not saving you any money. And it's worthwhile for you to work with someone who actually wants to take the time to understand and actually has a curiosity about your business so that they can actually find those deductions for you. And then finally, there's a massive cost to you if you decide to DIY your tax return, and that is the cost of your time. A mentor of mine, Chris Harder, gave us this sort of formula. I know it's been passed down and shared around, but this is the last time I heard this formula, which was discovering the value of your time. And it's a very simplistic way, but it can help you get a temperature check on whether you'd rather spend the money or the time on something. And that is to really kind of whittle it down to how much income would you like to earn on a per hour basis. We basically take your annual income and then distill it down to the number of hours you work in a year and figure out how much money would you have to make per working hour in order to achieve your goal. And what that did was that gave clarity to a lot of business owners who are thinking, I don't know what to charge or I don't know what to outsource. And the reason I'm bringing this up is whatever your hourly quote unquote value is, anything that costs less than that value should be outsourced. Anything that costs less than that value should be outsourced because the potential you have to earn money that exceeds that cost, it's worth it. It's absolutely worth it. So if you basically are deciding to invest your time as opposed to your money, it's actually going to be more expensive if your time is worth more than that money. You need to manage your time well and hand off this type of stuff to a professional. I know someone who actually spent 2 weeks combing through bank statements to save money on tax prep fees so he could do it himself. And what's so contradictory about this is that it would end up costing him 40 hours of time, and he bills at a rate of $400 an hour. That means that if he billed all of that time instead, it would have made him $16,000. And he essentially spent $16,000 to save $600. Now, if the fee is less than what you make in a few hours of time, it is 100% worth it because they're saving you that time and letting you convert that time into revenue generating time. And that's huge. I mean, think about how many times you use Uber when you need to go take a ride out at night to a place where parking sucks or you plan on drinking, right? Or if you hired a wedding planner to manage your big day, knowing full well that you could have done it all if you wanted to. This is just like those examples, and that you don't want to cut costs in this area. You want to have the most efficient result, but without compromising quality of your taxes. Trust me, you do not want to cut corners on this. It is not worth your time and energy. If you do get audited or if you do end up paying penalties and interest, it is worth you sleeping well at night knowing that it was done correctly by someone you trust. Do you want to explore more about the topics discussed in today's episode? Or maybe you have specific questions on how to apply what you learned. If so, check out the Keep What You Earn community. Join other listeners, entrepreneurs, and experts, and get the support you need to get out of overwhelm and into action. Click on the link in the show notes to join now for free and start maximizing the value you get from each and every episode. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.